Good morning and welcome everyone to the Beginners Online Trading webinar, the Trading Success Blueprint. My name is Danny and I will give you the webinar today. So let's begin. As I said, now we're going to have the Beginners Online Trading webinar. And my name is Danny. This webinar is live and it will be recorded and later on for you to be able to review it on our channel. Okay, so I will first explain what will happen in the webinar and then we can hit the road safely. All right, so the first part will be more of an introduction to the company, to the services, what we can offer in our facility, and of course, a quick introduction to the interface we're looking at right now, which is called the Web Trader. Okay, the second part will be more practical. We'll go through basic essentials for trading, just a very basic understanding how to approach trading, how the general concept works, certain things that you can see here on the screen that I'm going to show you. And lastly, on the third part will be, again, it's only if we'll have spare time, we'll do some analysis. All right. Any capital markets and trading information disclosed in this webinar is provided for informative purposes only and should not be constructed or applied as an investment advice, recommendation, or a suggestion. So as I said before, this webinar is live, but we are recording it for you to be able to review. Okay, we have a nice notepad here for the notes. Like I said, I'm Danny. This is the Beginners Online Trading webinar, but we'll definitely learn things that are not beginners only and are useful for intermediate and advanced levels as well. So to begin with, as many of you guys know, AvaTrade, we are a regulated company. We have 9 licenses worldwide. If you got a question or a query, you can address the customer service here at the bottom left through the chat or the WhatsApp function. Or you can send an email to AvaTrade, cs@avatrade.com. Okay, and they can assist you with all kind of questions related to customer service, related to the account, and so on. For the trading side, we have a senior account manager that can be assigned depending on your eligibility. So after you've made a deposit and your account is ready to move, you can ask for a senior account manager to give you service. It doesn't cost anything as an addition, and I highly recommend to check with the customer service unless the senior account manager has contacted you automatically, which often happens. Okay, of course, the senior account manager, as I said, primarily is assisting with trading inquiries and customer service. Well, does customer service. Okay, now the web trader, as I said, is embedded in the website, and it's not something that you need to download or install at any point. Okay, you can just log in with your email and password. You click on web trading or web trader and you're supposed to be here. Okay, you're supposed to see that. Sometimes it's like that with the lists. Okay, and like I said, that's called the web trader. We also have a trading app looks similar on the for the phone because this is a desktop version. Beside that, we have MT4 and MT5, also known as MetaTrader 4 and MetaTrader 5. And we have Ava Social, and we have Ava Options. Okay. Now, actually, let me put that at the bottom, and let me have that at the bottom as well, just so we can remember that what I'm going to show you are things that can only be found on the web trader. Okay, those 3 are self-explanatory. There is no need to explain. MT4 is MT4, MT5 is MT5. MT5 allegedly is a more advanced version of MT4, some may say. Okay, they are both great. Ava Options is a different concept, so I just put it here for you guys to know, but we're not going to learn how to trade options now. Ava Social is actually something I would like to say a few things about, okay, because this is a webinar for beginners, and those things are extremely useful for beginners, those 2 functions. Now, Ava Social, when you download the app, you have access to lists of traders, allowing you to pick some trader, and either follow or copy. Follow means that you're going to get notifications with the positions of the person that you're following, and you can either execute it on the spot, of course, as soon as you get the message, and trade similarly, or you can just do a research. You get positions, information with positions, somebody else's strategy that you can review. Okay, but nothing is, no positions are opened automatically. This is not automated trading. It's automated information. You're following someone for research purposes. You can, of course, like I said, execute it similarly, but by yourself manually. Okay, copy from the other end. If I'm copying someone, okay, another trader, like I said, you can either imagine as this would have been, I can't show you the app now because again, this is a computer and I don't have access to it to show you. But it's very simple. You download the app, you have follow or copy, and the copy function does the same thing as the follow, but it executes the positions automatically as well. Okay, so this is automated trading. Actually, I don't want to put it this way because it's happening automatically, but like I said, it's a human being that you're a trader that you're copying and not a machine. Okay, but it happens automatically. Positions will be flowing, and as soon as the trader you're copying will execute the position, your account will do it similarly. But the huge benefit with Ava Social is that you can customize and not to entirely copy someone to the exact numbers. You can also customize the difference. So in case I'm copying someone that has $1 million in his account and I'm only with 10,000 in his strategy, he might take a position that I can't, my account is not going to be able to handle. Then I can customize the difference to make it something very basic. So I enjoy the strategy, but I don't execute the position with the same weight, with the same amount of units, if it makes sense. Okay, so this is something you can do. There are other parameters that you can change there as well. Yeah, I highly recommend you guys to try the app and see how it goes. Really, it's a free app, and it's very good for beginners. Of course, intermediate and advanced traders can use it as well. All right, let's proceed with the web trader and the interface that we are having now. Actually, what I want to show you is a unique product that we have. It's called Ava Protect. But let's do it with one of the commodities. Let's have perhaps gold. Okay. As you can see, the product is here. As soon as I have opened, if I click sell or buy, it opens the sidebar here, and I have Ava Protect here with a golden shield. It's either here at the top. If you click it, it marks the box, or you can mark the box. And what it does is it allows you to protect the position for a certain time frame. Let's put it down. Let's write it down. Okay, what I'm writing down, you don't have to follow, guys, because well, you can if you want, but the description here is quite clear. I'm just putting it in my own words, so it will be a bit more straightforward. So Ava Protect allows you to protect the position for a certain time frame. Okay, whatever you lost during that coverage will be reimbursed. Okay, maybe will be returned. All right, and there is a fee when using the service. So there are 3 ground rules really to understand the purpose and the usage of this product. But now I'm going to demonstrate a scenario of how to use it efficiently. Because the idea here, let's just establish something very quickly and to simply understand the idea of trading before we make any further progress. Okay, so first of all, why do I need protection? Or maybe I should ask, what do I need protection from? If this is a buy scenario, which I don't know if you guys noticed, but in here when I go to the sell and the buy, I can click sell or buy. Of course, I can just change it later on. You see I have sell or buy. This one is a bit grayish. This is the lighter, where the lighter blue is, you can see what you picked, right? So this one is selected. And if I'm with the buy, that means that my intention is that the value will always increase, right? We want to buy now 24.8341, and if it increases beyond that, we're going to start making profits. First, we'll have to cover the spread, and then we'll start making profits. Now, because my intention is that the value will increase, what happens if it decreases? Then I'm losing, right? So whatever goes below that price, I'm going to start losing more capital on the position. So waiver protect, what it does is it protects me from if I took a buy and it goes down, right? It goes, let's suppose it goes down to the red line. And this area here will be my loss area. Okay. And as I wrote here in the description, waiver protect is going to protect me for that length. Okay, it's going to protect me for that duration. Therefore, if I bought it here and I've lost whatever amount of money during that period of time, I'm going to get it back. It's not depending on the price, it's depending on the time. Now, it's important to understand that we are going to use take profit and stop loss, okay, to demonstrate what can be the potential result of this position, of this scenario. And it's important to understand that the principle of profit and loss works for the sell, vice versa, right? I'm buying, my intention is that the value will increase. If it goes down, I have a loss. But if it's a sell, it goes the other way around, right? If it's a sell, my intention now is that the value will decrease. If it goes beyond what it's at right now, we're going to have a loss. Okay, very, very simple. If it's a buy, we want it to go up. If it's a sell, we want it to go down. If it goes the other way around, we have a loss. Now, in the scenario that we're looking at, let's keep it for a buy for now. And in the scenario that we're looking at, okay, what it's written here, let's just use the price that we have right now, okay, and let's take the lot size to the lowest, which is 0.01, since we're just demonstrating here. And because we are with a buy, our intention is that the value will increase. We are using something called take profit to place it in a higher point, okay, and a stop loss in a lower point. And what they do is the same way that I could buy, and basically if it gets to a certain price, I want to close the position with the profit, right? Let's suppose if it gets to here, let's suppose if it gets to the green line, okay, this is my potential price to close. So perhaps I can close it here. Now, take profit, what it does is it closes it for me automatically when it reaches that price. So if I'm going to place here 2518.19 and it gets to this green line from where it's at right now, assuming I'm buying it now, then I will make $35. It needs to travel all the way up to where I've marked. And stop loss does the other way around. Stop loss closes the position automatically with a loss. Okay, this one is going to be profit. Now we can understand. Now, assuming I bought it here and it goes up, I can place the, oh, we haven't changed the price yet. Let's do this one. Okay, assuming it gets to from here to here, we're going to make $35. And if it gets down to that level, we're going to lose potentially 45. Now, as I've explained, because we're using this product, because we're using a product that allows you to protect the position, if that loss, okay, that we have here, if that loss has occurred during that time, will I get it back or not? What do you think, guys? Let's also place here a few numbers just to help us understand a bit better. Now, price 24.83.76. This is also a buy. We should put it down. Then we have profit gold price is 25.19. Okay, and last gold price, it's not really a goal, more of a target, right? That can be, what was it, 24.38, 23. Okay. Now, because we are holding one unit, okay? So let's put it this way. Now, because we're holding one unit and this is $35 away, we can gain 35, and if it's $45 away, we're going to potentially lose 45, right? And the fee in here is $4.45. Now, if we let's also put it down just to be a little more organized. Okay, this can be as a minus, this potentially is a plus. And yeah, this is very, very simple to understand. So in this scenario, we can take a buy. If it gets to the take profit, we make 35. If it gets to the stop loss, we lose 45. But with Ava Protect, okay, it will be plus 45. This is as long as it was during the duration of my coverage. It's important to understand that if I decided to carry on with the position after the coverage, will I get the money back? What do you think, guys? Will I get the losses back if I kept the position after the coverage? Guys, please answer this question so I'll know that you understand. And by the way, before we proceed, do we have any questions related to the product? Any questions at all? Any questions, guys? Okay, 1 hour 45 off. Very good. Thank you, Mia. Very good, very important question. Mia here is asking, what if it would have been 1 day and not 1 hour? What would have been the fee here? So if I increase from 1 hour, increase the length to 1 day, the fee becomes 11.56. Furthermore, if I increase the lot size as well, watch what happens. If we increase it to 0.1, which is 10 times more, then the fee is 10 times more. Okay, but obviously the potential profit will be similarly. So if we place the same take profit as we had a minute ago, the same loss that we, okay, so that means we can potentially gain 340. We have to pay 115, and potential loss is 457. Okay, very easy to understand. Protect. It's a very useful product, very powerful product. But I suggest you guys will do this comparison just to prevent yourself a situation when you're paying more than, God forbid, the profit, or more than the loss, which basically makes this product futile if you're doing it. There is a question: do I pay Ava Protect in advance? No, you pay afterwards, Alfred. You're gonna see it when you're closing the position. Okay, the fee. And it increases, the fee increases or decreases according to the length of your coverage. So 1 hour costs this much, 3 hours cost this much, 2 days cost 152. Like I said, it also, if you increase the quantities that you acquire, you'll make more profits, but the fee will be bigger. In this scenario, as an example, we can potentially lose 921 and to only pay 300. So this is something I'd be happy to do, right? I'd be happy to pay 305 and to get back 921. Keep in mind that you cannot extend the coverage. You may not decide to extend the coverage. You cannot get the losses back after the coverage ends. Okay, if it ends in 2 days and I kept it for a month, I'm not gonna get the rest of the funds for the remaining days. Okay, let's proceed. Let's clean up everything we have here. To the left, we have all kind of interesting things here. We have the positions, the orders, the history, signal section that is very, very useful, which you can use. We also have a news section which you can use. And we also have discovery here with economic calendar, which lets you filter certain things by the impact, by the dates, by the certain currency. If you want, you can just pick whatever currency you want. Okay, and here, if you go to discovery, you can find all kinds of analysis tips. You can also go to Market Buzz and see which things are more popular these days for you to follow, to analyze. NVIDIA is extremely popular. So you can see how many mentions and in what subject, and you can look into it and add it to your fundamental analysis. And also, like I said, it's not a lot of time, but just understand the signal section here for a few moments. Analysis is divided to two types, right? We have technical analysis, we have fundamental analysis. Signals that we get here are made with technical analysis based on support and resistance. Now we've picked something. This is a great example. So as you can see, sometimes in this section, you're going to find signals with this line here instead of a price, right? What does that mean? You see, for gold, if I click on view signal, signal looks right. I can expand the chart, I can match the validity, and I can do analysis, and I can use the signal freely, right? We have a scenario here for a sell, scenario for a buy. We have support and resistance, which are edge points on the chart, which we can place and understand better how to approach and how to do analysis, right? Okay, which are described in here, so you don't have to do what I did. It's already there. Support and resistance, and based on that, you can choose buy or sell. So let's go with a buy. And as we've learned, take profit closes the position automatically with a profit. So it's already equipped with that. Same apply with the stop loss. Okay, of course, I can change it to something I find right as an example if I want to adjust it, but I can keep it as it is, and I can also adjust the load size. Okay, keeping the analysis from the signal, but I can customize the load size. Yeah, signal is pretty straightforward. You see, it's sell scenario instead already placed. The analysis. Okay, as you can see. Now, what I wanted to show you about the signals that looks like that. You see, crude oil as an example, it doesn't look right. It doesn't show us stop loss or take profit. The reason is that this signal, it was just that we are very lucky. You see, this signal was not valid until a moment ago. Let's see if it will work. It doesn't work. You see, it wasn't valid until really just a few seconds ago. But now if we click it, oh, there you go. You see the numbers has appeared. And if we click view signal, oh, it's still, perhaps it's taking its time to work on himself. Yeah, you see, it still doesn't work, and the reason is that the market is already past a certain level that was in here, right? One of the scenario that was described here has already happened. So there is no point placing take profit or stop loss because those levels has already passed. Okay, so it's written here, the market has already reached a key level, right? All right. Let's proceed with our businesses and move on to the second part. I think we concluded the introduction. We can get down to business. Let's click on the AvaTrade symbol to bring us to the default page and find ourselves a nice asset to analyze. Let's go to look for something in the commodities, maybe even agriculture. And let's go with how is coffee looking like? Not bad. Okay, so we would like to pick something that is educational, at least as much as we can. All right. So in this case, when we are looking at the different assets and what we looked at prior, we have to make sure that we have selected sell or buy to be able to switch from the chart to the existing chart to present us the order entry for the asset that we're related. As you can see, we're looking at soybean, but unless I'm going to click here sell or buy, I'm still on soybean. But we're analyzing silver, right? So I must click sell or buy. Let's go with a buy. And then it's going to switch to the what is presented on the chart. It's extremely important, guys, to do that. Otherwise, you might accidentally execute a position from an asset you're not even analyzing. Okay. Yeah. So regarding that, let's just have a quick guide through about the toolbar so you guys be able to maneuver a bit more efficiently when you're using this interface. Okay. Yeah. Yeah, so if I go from left to right, we have here the search bar. I searched manually through the lists, but I could put here silver, pick it from the list. Can look for something else as well. NAS, can go to NASDAQ right away. Let's go back to silver. Okay, just to show you. Okay, never mind. I think we understood the point when with the order entry. I don't want to delay about it too much. One more thing you want to do, guys. If you click and squeeze on the column area, it lets you customize the chart, lets you see things much clearer than you would have had if you're looking regularly on days, right? Sometimes you want to be able to stretch or squeeze it down, and then you can maneuver a bit better for analysis. Okay, so you do it this way, and then you can move it. All right, now if I keep going to the right, beside the search field, we have here the time frames, which we can change. Now every candle on the chart is presenting 1 day, but I can make it 1 week. I can make it 1 minute or 1 day or 1 hour as an example. Looks entirely different. Every candle here is 1 hour. Let's go back to days. Okay, and in this case, we can keep it as it is, and perhaps we'll change it later on. We can also change the shape of the chart. Okay, if it looks like a line or it looks equipped with candlesticks, Japanese candlesticks or bars, where there is a significant difference using the line, as some areas on the chart are not going to be visible for you using the line. See where I've placed the rectangle here. If I put the line on, doesn't necessarily show me everything, but with the candles we get deeper depths. Okay, if I go to the crosshair and I change from no crosshair to crosshair, I actually have data from the candles I can analyze. See, we have here the information, open, close, high and lows. You can understand the levels. If I keep going to the right, we have here the different layout. We can have 2 assets at the same time. If I keep going to the right, we have indicators here which we can apply. If I go all the way to the right before the sell and the buy, we can find all the nice things, the lines, trend line, price line, and timeline, and all kind of things. Now, when I have those lines applied on the chart, okay, which personally it lets me understand what situation I'm looking at and how to approach and what levels am I going to work with, because I don't want to analyze the whole thing. I want to focus on a specific scope perhaps. Okay, even though I'd like to switch between time frames and not just to look at the one time frame, right? Okay, so to begin with, I'm looking at silver that it seems like it's slightly lower than yesterday, right? Maybe halfway, give or take. And it seems like it's quite on a bearish trend. Okay, what does that mean, bearish trend? As you can see, if you compare, I don't know if you guys know the terms, bullish, it's called bullish because a bull left his opponent to the air, right? Bear slammed it to the ground, so bearish means it goes down. And we can see that this is already the 3rd day we're having it beside a weekend, so we can include this as our 4th to complete the formation. Okay, but we can see here that the candles ends with this kind of a thin line coming out of it, so we can understand that this is a price that the candle has gone through and it went back. So if I switch to hours, remember, because this is daily candles, every day obviously has hours in it, right? And every weekly candle has days in it and has hours in it. So if I'm changing it to days, I get a bit closer scope. And I can see several days, several candles now complexing a day, right? If I go like this, then we can see that you see Wednesday, this is all day, this is Tuesday till here. Yeah, but you get the point. Okay, so if I would like to understand what happened here, I can just change quickly to 4 hours, and we can see that those levels are levels that silver has bounced back from. You can see is we have this nice Okay, nice tent here, and then some kind of a V shape in here. Not exactly a V shape, but as you can see, there was a recreasement here. Okay, and we can understand that potentially silver is on a downtrend. It's trying to consolidate, but it doesn't work. As you can see, it went down, goes up, went down, goes up, went down, and then goes up. Okay, it reached here yesterday. It was almost here today. Okay, got to a very lower point. Now, with this, because of this is already the second thin lines that we get, I have a reason to believe that it might turn around, right? Silver. Okay, I'm not sure if it's going to go all the way up, but I have a reason to believe it will turn around. Now, is this enough for me to take a buy with? Let's get rid of all of that. Put here silver. And we're going to put some few things down to help us construct the position with a bit more sense. So we have target, time, movements, and units. Now, when we are looking at silver, let's look at the price. 28.70. Okay. And we have TP. Okay. Now, when we are looking at silver and we assume that it might turn around, okay, let's assume that we want to buy, we think that silver goes up, okay, it will turn around somewhere here. Is this enough for me to take a buy? The answer is no. Why no? Because if I click here, buy, okay, and it goes up just a little bit, let's suppose it gets down to here, okay, so this is my profit area, this is my loss area, right? Okay, if I click on the buy, it goes up slightly to the green area, and then it goes down. Okay, will I make profits or loss? All right, so what do we have here? We have here a buy. Let's suppose we take a buy. It goes up to here, 28,303, and then it starts going down. Now, if I close this position during that movement, let's see what could have happened. Okay, 28,303. Let's simulate what could have been the result. Okay, so if I close it in here in this green area, if I close it at 28,303, I'll make $27. If it goes down, then I can possibly lose, let's see. Oh, sorry, this should have been here. Okay, I can possibly lose 160. Now, you guys have to agree with me. How does that look, by the way, before I will explain about what's happening here? How does that look? Making profit of 28, losing potentially 160. To my opinion, it doesn't look great, right? We want to keep on a certain ratio when we are trading between the profit to the loss. And of course, this kind of comparison doesn't look too good. That means that the price, I should have kept it, okay? That means that the price that I'm aiming for with a buy needs to be, I either need to close it here and then make 26, but it's not really a number that I like, right? 26, I want to make much more than that. And also I need to know that it's realistic in the time frame that I'm analyzing, since we're analyzing days, right? So hypothetically, if I would aim for something higher, because of course I want to make more profits, like 30.183, I need to know that it has, you know, the ability to get here. Okay, how can I confirm? We're going to look at the few options. And also the loss here, the stop loss that I've placed, the 26.425, I need to know that it's a good place for a stop loss. Okay, maybe I need to put it a little lower because it already visited here, so it might be vulnerable to place it here. So we need to know how to place it. Now, if we're looking at those levels, and we would like to carry on with the analysis that we did, so 28 can be our, what this does, execute when price hits, what it does, is it maintain the price that I put it here, 28, let's make it 28 flat. Okay, and what happens is if it gets to this price, it launches the position automatically. So I keep it at 28. Even if it's like that, or it goes down to 27, or it goes up to 29, still it's not going to launch the position. It's going to launch it when it gets to 28, right? Well, unfortunately, the difference between now and what we're looking at is too small, and I believe that if I do that, it might very swiftly launch the position. But if I go for 29 as an example, then if it gets to the 29, we are with a buy, yeah, then it's going to launch the position. And of course, it's not going to show me profit because 29 is a higher value than this. And as we've learned in the beginning, when we are with a buy, we want the value to increase. So we're going to keep it as it is for now. 28 is fine. Okay, and we are going to see if 30.1 is a realistic target to close the trade, or if it's far-fetched. Now, because we're looking at days, and as you can see, if I'm comparing yesterday as a reference, and I want to know how often silver visits that price, how frequent it is to move to that price, we can see that it wasn't there yesterday and it wasn't there the whole week. Last time that it's been there was the 27th, right? Which I think it's more than a week ago. So if I'm looking at the statistics here to think it might go there in a day, unless I have something fundamental to back me up, I think it's much more than the average. Now, what I can do is I can either expand the target that I have. Let's put a target here. Of course, if I wouldn't have any target, I would never know when to close the position. I mean, I can go with my hunch and just close it randomly, but I don't have to, I can't design the position in a certain way. So now, let's suppose that the target here, let's just say 750 as an example. Okay, and we are looking at days. Okay, and we understand that the price here is a bit far to get in a day. So let's say 1 week, right, is an example. And in the movements, we have two ways to find out the potential movement for silver to move, the average movement. One is manual check, and the second one is an indicator, which we are going to use briefly. In the manual check, what we can do is we can enable the crosshair as I said, and just go take the differences, open minus close. That means that we're going to measure the difference between the open to the close. As this is a red candle, we understand that it begins from a higher point and it went down right in here to the end of the red body. Okay, from here to here is the red area. It's open and closed, and from bottom to top, this is the high. As an example, as you can see, the high is 28,556, and this is the low. Right, low is 27,697. right? So what I can do is I can subtract the open from the close, measuring that length, and I can measure the high and the low, and then I have an idea of how much it moved yesterday. The problem is we have a couple of problems. A, we're not analyzing days, we're analyzing weeks, as the target we've placed is a weekly target and not days. So let's switch from days to weeks. And now when we're looking at weeks, let's extend that. Let's extend that as well. Now we can have a very nice picture. Okay, and as we can see, the price that we've placed already matches with what happened a week ago. So statistically speaking, I can think silver has a possibility to get here if it goes up. Okay. Now, regarding the movement, as we said, we can either go manual checking and subtract the open from the close or the high from the lows, or we can simply go to here and add average true range. Then I click and drag it to the right, and then it lets me choose how many candles backward it's going to give me an average from. So we said we could subtract the open from the close, the high from the lows on a single candle. But even if we hypothetically, based on that, analyzes the candle, one candle is not enough. From a simple understanding that each candle here is different from the previous, right? I mean, look at that candle versus this, or that, right, versus this. As you can see, that different size, different tendency, different shape. So of course, the numbers for one candle is not enough. And to start accumulating more candles will complex the calculation by a few times. Therefore, if I'm using an indicator called average true range, which does exactly that, it's a huge time saver. And all I have to do here is just define how many candles I wanted to analyze. So let's say 10. Okay, I can also change the color here. Let's keep it 1px, click save. And now we see that the average movement for silver per week is 1.7734, which makes, if we are with a buy-in, we are potentially looking at taking a higher take profit. What I can do is I can just add on top of the current price difference which we get from the ATR and see if potentially it moves like the ATR, what level it can get to. Which in this case, it would have bring me all the way to here, but not to the 30, right? The 30 level is just above the average. It's above the average, not necessarily a bad thing. Again, like I said before, it's not a bad thing at all. I would even though 1.77 is doubtful for me, because I think this level, it might be a bit ambitious. So I might want to cut it beforehand. Maybe let's say a flat 29 or something like that. Then if it decides to turn midway, so I at least I have acquired something and I'm not aiming too high, is an example. Okay, so for the movement, the ATR is 177.49, but we're gonna go for 77334. Okay, but we have customized it and we have turned it to just $1. Now, if I wish to make $750, okay, and I'm looking for $1 difference, how many units do I need? What do you think, guys? To make 750, buying 750 with price difference of $1 per ounce. Okay, how many units do I need? Anybody knows? Let's go target divided by movements equals units. Therefore, 750 divided by 1 is, who knows? Very good, Clara. Very good. So, Clara, you wrote down obviously 750. Let's put it to the test, right? Still, let's change the take profit here quickly to 29. I'm gonna quickly go here and put 750. Okay, but the problem is, guys, the problem is that it's only in increments of 100 because the size of this contra at the silver, one lot has 10,000 in it. Okay, therefore I can't go with less than 100 when I'm picking a quantity, the amount lot in here. So it needs to be either 700 or 800. Let's go with 700. I'm willing to compromise. Let's reduce that to 700. It's not bad. Okay. Now let's make it 700. And as we see, 700 is exactly what we can get. All right. Let's also use the same impression, the same reference length for the stop loss as well, making it 27. Okay. And now we can see that every dollar that silver moves, when we acquire 700 units, will naturally be $700 profits or loss. Okay, super simple. This is also a great way for me to customize my ratio, as I spoke about in the beginning. And I understand, by the way, that both cases, let's pull the green down to the take profit, which was 29, and that one, let's make it red. It's really not mandatory to do this colors things, guys, but I have to tell you that it does, at least for me, it helps remember certain scenarios that I analyze. Okay, so you can keep it like, you can place it this way, and then even if you go to another asset, right, you go to copper as an example, okay, and I go back to silver, it's going to stay, right? It's going to stay just like that. And this kind of composition allows me to just go back to the, oh, let me put this one. Okay, this kind of composition, what it allows me to do is just to reuse this position again next week, okay, unless something has changed. And then just to determine stop loss and take profit, and I'm halfway composing my position. Okay, this is a great way to get used to. It's not mandatory at all. As I always say, things sometimes this way, it's a bit slower than just click buy or sell, but sometimes preparations is helpful. Okay, and let's also change it to silver. You saw that it was copper here. This is what I've explained in the beginning, that we must be careful when picking the okay, when opening this interface. One more thing I want to show you before we say goodbye. So if I go to instrument details, it's going to show me here everything I need to know about this asset, about this instrument. What is the lot size? What is the spread? The leverage is also outside as well. We have the overnight fee here. We have the times that it operates. We have the market sentiment, all kind of things here really that are super helpful. Yeah, one more thing I wanted to show you regarding adjusting the ratio, just to really give you a practical tip before we say goodbye. Because as you saw, the ratio here was the same. The ratio here is the same. It's 700 profit or loss. But the problem with that is, let's suppose I don't want to lose 7% out of the account, right? So 10% out of 10,000 is, okay, let's do it with a calculator. It's only going to take us a minute. because it's important for me that you guys will understand the process here more than the numbers. So what if I want to measure my exposure and I want to customize to risk money management and prepare myself to risk money management in my strategy? All right. So let's go balance. So I have a balance of 10,000, right? And I have potential loss 700. So how do I know my exposure? How much is this? And if it's too much out of the account, and how do I fix it? Right. So one way to do it is to go potential loss divided by balance equals X, and then X times 100 equals exposure. Of course, instead of this times 100, I could just divide it by another 0.01, 0.00 to add it to the actual figure. But I'd rather do it this way, and then it keeps it very simple. So let's do what it says here. Potential loss 700. Okay, balance 10,000. So I'm gonna divide it by 10,000. Okay, so that's 0.07. Okay, and if we multiply that by 100, as it's written in here, then we get 7%. Okay, exposure. So how do I make 7% to, let's suppose, 3.5? Okay, but still I don't want to reduce the lot size, because if I do that, it will have an impact on my profit as well. So I don't want to do it. I want to maintain the 700 as profit, not to make any change on it. Okay, so how do I make 7 to 3.5? Basically, all I have to do, because we are with a buy, I just need to get my stop loss closer to the entry. Okay, so if I use this difference of $1 from the entry to the stop loss, I can just cut it by half and make it half away. Okay, and then instead of 27 flat, I have 27.5, which lets me lose 350 instead of 700. This way I have a ratio of 1 to half instead of 1 to 1. Okay, very simple, very useful, super practical. Guys, unfortunately, our time is up. Appreciate everybody who assisted me from the audience with the questions and answers. Tomorrow we're going to have a nice live Q&A. You're all welcome to join us and ask your questions. See the answers on the screen. Apart from that, I wish you all best of luck. Have a fruitful week and have a good day.